Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pumps in the coins that we've been following, as well as just kind of observe how, in general, the markets are still a bit lackluster. So, nothing to get too excited about yet, but we do see some coins pumping. And of course, if we go over to the stock market, we can see that in general it's also a mixed bag with plenty of red to go around after just this kind of enthusiasm that's been in the market. Still some profit taking. If we do look at the economic calendar, you can see that we are going to have some PMI data today regarding S&P, U.S. manufacturing, and construction spending. This could influence the market just a bit. This looks like it's a final report, so probably not going to just shake us up too much. But the devil is in the details sometimes. Let's just jump straight to the charts. Let's go ahead and take a look at Bitcoin. Now, just for some truth in advertising, I do want to go over some of these time frames to take a look at what we were talking about in the previous Bitcoin episode. So here we are on the 4 hour. Let's take a look at what I had designated for the previous 4 hour. Well, there you go. We did have this a critical level, these green levels that I had marked out here, and I did mention that if we were able to take out that green level, we should be able to expect a pump. And sure enough, if you can just move the EMAs out of our way, we can see that as soon as we grabbed a hold of this level right here, that key alpha momentum level, then we did just get a nice pump off of the 4 hour. And look how we just tagged directly back to my key level, and how we even tested this continuation momentum level down here. So in general, our strategy continues to work. Of course, if we did lose the white line down here, then it would have been game over. The volatility push could have been to the downside on the 4 hour, but in fact, look how well we held that level, and how we just respected all of these levels, including that push off on the 4 hour. Now we can take a look at the same behavior over here on the 12 hour, because I also showed you our 12 hour critical levels. And if we do just do a review, just for, again, just for some truth in advertising, just for accountability, we can see that I do have my continuation momentum level right here, and we did hold it twice on the 12 hour. And of course, we got that push off of the alpha momentum kind of threshold down here. And look at where we wicked to, guys. Look at these series of wicks on these multiple 12-hour candles right to our volatility pivot, okay? So guys, when I mark out these levels for you, it's no joke. I mean, it's a pretty big coincidence, right? That our wicks are just hitting boom, boom, boom right at the volatility pivot. So again, guys, I just want to emphasize that the momentum strategy that I'm putting before you really is working. No matter which time frame we're looking at, like they're consistently working. No matter what my attitude is, bullish or bearish, the math doesn't lie. Okay, my strategy doesn't lie. This has been incredibly reliable, and the Alpha Fam is just killing it with this strategy, guys. Let's take a look at the daily. Okay. So here we go with the daily, and these were the previous, this was the previous Bitcoin episode a couple days ago. And guys, look at this. Look at how we perfectly lifted off of the daily, momentum threshold over here for support. And here's our alpha momentum pool. And if you take a look at this, okay, from when we had marked it out, we never violated the bottom. That's why I didn't need to update this, because we've just been swimming around in this alpha momentum pool. Now, of course, this was the day back here on the 30th of December. It has been a holiday season, so I haven't really been just updating this chart every single day. But guys, there was no need to. We had the alpha momentum pool, and look at us just swimming around in it, holding the bottom of the pool. And look at this, testing the top. We haven't broken out on top of it yet. I am going to give an update this episode, but guys, I just want to show you again, just for truthfulness and transparency, just how well this strategy is working. And look at where we're wicking to the daily volatility pivot. Okay, so guys, again, there's no joke with this strategy. Again, we can just kill that because look, we didn't violate it. We didn't we didn't lose the volatility pivot. These are all just wicks, and essentially we have our candles sitting on the bottom of the pool, not really not a full candle body underneath it. And so guys, this thing just was sticking its toe down, basically teasing out death, but it didn't drown. It just got a nice bounce. And when we got that retest, and it was, look at the pin, perfect precision to my alpha momentum pool, the bottom of the pool, before boom, right? Boom, all the way up here. Just an incredible play. So these momentum levels are critical because everything is momentum in trading, guys. Everything is momentum. That's why I love EMAs as well, because EMAs are also a momentum oscillator, right? So let's go ahead and take a look at the 2-day play that we were looking at, and essentially the same thing. Okay, the alpha momentum pool is very similar, and you can see that we did get on top of that 2-day alpha momentum pool. And what happened once we got on top of these levels? Boom, of course, we were just spiking up. Now we are meeting resistance up here, but I'm going to give an update. Guys, let's go ahead and just take a look at what that looked like actually on the 2-day chart. And you can see that candle is almost like directly on top of there. And you can also see where our candle body got limited right at the top of the momentum pool. The reason I'm going over this stuff, guys, is just because I want to assure you that the strategy that I'm presenting to you in these daily or every other day videos, that it is something that is reliable and it is hitting its targets. And the support levels that I mark out here and the critical threshold levels that I mark out, they are significant. Okay, nothing's going to be perfect ever. If there was 100% predictability in markets, then nobody could make money because everyone would just put their money on the same 100% predictable number. And so there would be no money to make in that market. But guys, even though we're going to have variance and it's not always going to hit, again, we are having an extremely good track record with this. Let's take a look at the 5-day. Okay, now this one, I'm not sure if this one closed yet. No, it has 2 more days to go. Now, what I want you to notice about the 5-day, okay, and again, we're doing a review of the previous episode, is that we are underneath the 5-day alpha momentum pool, which I had set out in the previous episode. And so, guys, we are actually starting to stick a toe back up into the pool. And if we can reclaim this level, if we can close in the next 2 days above this 16,716 level, that could suggest that we could reclaim this pool, or it could suggest that we are going to regain some momentum to the upside, which we had been losing in this extremely bearish candle. You see this candle right here, right? It's just pushing us down. But guys, the alpha momentum pools are telling you that if we can hold on to this level, we've basically got just like 2 fingers hanging on, right? We're falling over the edge of this cliff right here, but we're just hanging on by a thread. And if we can get back into that momentum pool and close in 2 days, then we do have a chance of pumping significantly higher. And as I'll show you with the updates, again, we're doing a review right now of the previous episode. With the updates, I will show you how that's possible. Let's go ahead and just review the 2-week. Now, the 2-week, let's jump over to the 2-week chart. You can look at how we just respected this level perfectly also. And you do see that we are getting I wouldn't say rejected. Okay, it's too early for that. We do have 12 days to go for the 2 week to close, so plenty of time to change that around. But we've got this bullish candle. We did lose the 2 week temporarily, and look how far we dropped. Oh, guys, check this out. Look where we dropped to on the 2 week based upon this alpha momentum pool strategy. When we lost the alpha momentum pool, we wicked all the way down. Okay, not perfect, but pretty darn close to my 2 week volatility pivot. And you know what the 2 week told us? I don't want to. I don't want to to a pivot in volatility. I'm going to maintain volatility in an upward direction. Remember, underneath this volatility pivot, bias is going to be to the downside on any volatility shift, but above it, volatility shifts, which, by the way, are direction neutral. You can't control volatility in the market. That is the uncertainty that gives us money. Volatility gives us that uncertainty, which allows us to make money because, again, if everything was perfectly predictable, no one could make money because everyone would be betting the same direction. Everything would just be break even. Okay, we need volatility. And so when there's a volatility shift, that randomness injected into the market, which just makes every day a new trading day. Again, our bias can be kind of inferred by which direction we are above that volatility pivot. And for the 2 week, look, we wicked right down to the level that I set for our volatility pivot. And what did we do? Sure enough, we pumped back up. And now we're butting our head again on this 2 week alpha momentum pool. And should we be able to get back in there, then we could see a pump even as high to the to 18,000 up here. That might be slightly ambitious. The 2 week is a very long period of time just to try to project in advance, and that is one of those more macro kind of time frames, at least for how fast crypto moves. Maybe not for the stock market. And we did already recover a lot of this candle over here with this wick. So can we do that? I don't know. This could still just be a series of lower highs on our way down, perhaps even to 15,400. But guys, that's just this is just a summary and kind of a review of our track record with the last episode at the end of last year. And of course, we're starting 2023, so it is good just to see how we did close things off there. If you want just a snapshot of the year, let's go ahead and put on the yearly candles, and you can see that we do have essentially a bearish engulfing candle to the downside, which means that this candle is bigger than the one before it. And while this one was also very red and very deep, it was smaller than the bullish candle before it, and so that does suggest that the bulls can recover. Now, with a bearish candle, okay, being engulfing the bullish one, that suggests that there could be more downside. You do see that we are hanging on, the edge right there, not pumping, not really doing anything but going sideways. And so, the year has, an entire year to go. We're going to find out which direction we end up. But we also had a 6 month close, and here you can see this bearish engulfing candle also popped us down. Is this going to flatten out and start curving back up? Maybe. That's highly possible as long as this candle stays blue, right? Like that could be just a softening that pops us back up. However, if should we lose this level right here, approximately where we are, then that's just going to suggest continuation to the downside. A nice thing is that this candle is much shorter than this one, so it's not like we're just in free fall anymore. We are starting to kind of curve that downward momentum, and the 3 month gives you an even clearer picture of that, where you do see this nice kind of arcing here, and yeah, a little bit of scariness there, but overall this is just kind of a jitter in an overall arcing to hopefully flatten out. Okay. Do we get one more wick down and then we go? Who knows? We did that in, over here during the virus era. We did it over here, just a nice wick, and then we got the round and the pump. So we'll have to play it by ear and see how the first quarter of 2023 goes. But this is your 3 monthly. On the monthly, you can see pretty much the same thing. And now this is the chart that we overall just recognize. Okay, and one thing that a lot of people are quite concerned about is they're drawing an analogy between this structure over here and this structure over here. And many people are seeing that we are putting in this kind of distributive appearance right here, even in this area. So, could this have a capitulation to the downside, and that bearish engulfing candle on the year kind of, just it still has that push to the downside. That 6th month still has that push to the downside. The 3 month maybe has that kind of wick to the downside. Well, you would see that on the monthly by another kind of capitulatory candle or something like that. And so a lot of traders are looking for that down to 13K even, down to 10K even. And, many traders actually do project something in the neighborhood of 8,000 to 5,000 as being highly possible. But again, we get to those lows and you start breaking some really critical structure. Ideally, we hold above that $8,000 level. And just to be more bullish about it, ideally we hold above 13,000 to even where we are. I mean, this could be just a bottom, and maybe everyone's just too bearish, but we'll find out as the year goes on. This really isn't a macro video. I'm just trying to give you a perspective on the year, the 6 month, 3 month, and the monthly, since we are headed into a new year. Guys, let's go ahead and go back to the daily. And let's just get rid of this previous episode chart. Let's go to the new chart for the daily, which we'll be shutting down in tomorrow afternoon. So we do have time to get a nice play here, but I do have a caveat for this because we're also going to take a look at the 3-day, and the 3-day is also going to be shutting down or closing rather tomorrow. So the daily and the 3-day are what we're going to have our eyes on. Now, you can see that if I do throw on the EMAs, that we did get that nice squeeze, of course, that we were looking at in the previous episode, right? We got that nice little squeeze here with the 4, my trademark EMA, and then the 9, and that ended up getting a nice pump all the way up to what I suggested was highly likely the 21 over here at 16,700 using our old momentum there. Just to update it, these are our new key levels to watch for the daily. All right, these are the updated ones right here. And so we will need to hold 16,667 in order to continue our momentum to the upside. This is a very pretty squeeze right here that we have going on the daily. So I do suspect that there is the possibility that we can hold this and continue to pump to the upside. And I would like to see that happen. Now, could we dip down a little bit? Yeah, we could dip all the way down to a 16,600-ish, maybe 16,500-ish, and still our momentum would have a bias to the upside somewhat, right? And that's our general continuation here. But we're really going to lose a huge chunk of momentum if we do dip under 16,640. So the alpha momentum pool for the daily here is going to really be that area between 16,667. On top of it, I'm definitely bullish. Below it, I'm just I'm worried that we could have potentially a turnaround, right? And then we would really have to watch this general continuation area. Now, guys, that's the daily, okay? And we also have this volatility pivot all the way down here on the daily, 16,483. Again, in that $16,500-ish area, suggesting that we really want to hang on to 16,500 because above that level, we are going to still have a bias to the upside in terms of volatility. In terms of our momentum, we will have lost a good chunk, suggesting we could retest the lows. So again, like these are the key levels that you want to pay attention to. Should we close underneath any of these tomorrow? But we are well above it, and I do suspect while we could have a check back, we often bounce around between EMAs and then find our way back up into this area eventually. Let's go ahead and take a look at the 3-day, because the 3-day is the higher time frame that we're going to be operating on um, in tomorrow's close. And so this one could have a bit of an impact itself. Now, the alpha momentum pool for the 3-day is going to be between 16,640 and 16,530. So you do see the honesty of the 3-day chart here. Basically, the 3-day chart is telling us, look, man, you got to hold 16,530. Okay? You close tomorrow underneath 16,530. Likely you're going to take a dip down to this $16,000 area, and hopefully you can hold on to 16,291. But you're going to be underneath your 4 EMA, underneath your 9 EMA on the 3-day. It's just an ugly look. However, we are currently above the additive and subtractive momentum level, which is the top of my alpha momentum pool, as I define it between these green lines every day. And that is above 16,640. So very similar to the daily, which if I do put that one back on, you can see they have a general agreement, okay? So essentially, conservatively, you want to be above 16,670, let's say. And then if you want just a little bit of a front run ability, then 16,640 is the crucial level that you want to be hanging on according to the 3-day chart, right? And then likewise, the bottom of the pool, well, the daily is saying that we need to hang on to 16,570, 16,480. Well, the 3-day is square in the middle of that, 16,530. And so I really like this number because, again, like the higher time frames tend to be the more powerful charts. So if we are going to be looking at key levels, what I would do is I would just be a little bit conservative. And so I would take the bottom level from the 3-day here and just really absorb that. But let's see which one is higher for the bottom. It should be the daily, I think. Uh, mm, well, in this case, it's actually lining up here. So I think we could say that that critical level is 16,530 based upon the 3-day close. And then we are going to lose or gain momentum above 16,640. But the daily is telling us that we're going to want to hold above 16,670 essentially in order to just continue on the shorter time frame. So anyway, guys, sometimes these different time frames contradict each other a little bit, and that's why when you're taking trades, usually you want to be looking at 3 time periods, right? The time period you're trading on, and then also the 2 time periods that are around you, right? The next time frame above you and the next time frame below you, to see if they're all in agreement. And what we can see with the 3-day and the daily chart is that they're both in agreement, okay? So if you are trading on these periods, then we can see that right now we do have a bullish orientation, And while we are under the 9 on the 3-day, which isn't the best look, um, we have a path to get up into that area, and you can see that the 3-day has a volatility pivot around 16,940. So that could be a level that is achievable should we pump. And if we can hang on to that, then our volatility can shift to the upside, and perhaps we can even take out this 17,200. This will be coming down a little bit. This 21 EMA. Maybe we can take 17,200, 17,300. Should we be able to get above this volatility pivot somewhere in the neighborhood of 16,904, which would be solidly above the 9 EMA, which is what we would need to squeeze up there to begin with. So guys, for Bitcoin, I think that's going to do it. And what I'll like to do is just do an analysis briefly of Solana and then also Litecoin, because we have been following these two coins and they've been respecting our levels quite well. So let's go ahead and take a look at Solana on the daily here. You can see just from our EMA's perspective that we did get a nice daily squeeze, which is continuing to squeeze, and it does have the potential to get to 1266, maybe even 1477, but we have a fair amount of overhead resistance at that $13 area. So there could be a limitation on this move. Could we continue to pump or just wick up here? Well, that would help us recover part of this candle before perhaps continuing to the downside should this move be limited, should Bitcoin itself struggle to achieve levels, then probably the rest of the market would as well. But let's go ahead and take a look at our previous daily levels just for some truth in advertising. Guys, like this is what I was telling you in the previous episode that specialized in Solana, that if we were able to, and again, this is a review of the previous episode, that if we were able to hold above this 833, the volatility should bring us to the upside. And look at this little area right here, right? Like we actually did wick down to 824. And, as soon as we got above that, I said, hey, look, as long as we're above this point in that wick, we are going to have the likelihood of continuing to push to the upside based upon our shift in volatility. And where we would need to hold in order to have a pretty sizable pump, because you can see we have this diagonal as well. And what we could have done is we could have, pumped up and then bumped our head here and broken back down. But instead, we broke back up. What was the decisive factor in that? That was our alpha momentum pool. We recovered this level at a 992, and then we gathered new momentum at 995, basically that continuation momentum. And then what I called solidly bullish here was really that additive subtractive level, in which case above it we're adding considerable amounts of new momentum above $10.26. And so what do we see happening above $10.26? Just an explosion to the upside, guys. Just an explosion. Okay, this was purely vertical. Just on the alpha momentum play, that was a nice 16%. So, guys, I hope some of you were able to get in on that. I don't mark out these levels for no reason. We can drop down to the 4-hour and see how this was respected, and you can see how we pumped up here to this level, and then we fell back down on the 4-hour, but we never lost that hold level. And so because we were able to keep that, and we actually had a little bit of a double wick here, and then a higher wick, and then a solid candle, a couple solid candles right above there, just boom, guys, we just nailed it over here at the Alpha Fam. And whether you entered at that support or you entered up here, which would have been actually kind of chasing the pump. Anyway, this thing exploded based upon our theory. So, well done, Alpha Fam. I mean, we definitely got that one. And again, it doesn't matter if you're bullish or you're bearish, okay, guys? Like your opinions don't matter. Like no one cares, okay? Like I sometimes wake up and I'm bearish, and sometimes I wake up and I'm bullish, and that opinion doesn't matter. Even if you see things in the chart that look bearish and you're saying, oh, this is a bearish continuation pattern, this is just distributive, you know, uh, maybe somebody thought that this was like a, you know, I don't know what they could think that was, right? To the downside, and that it's probably going to keep going. Well, it doesn't matter, guys. My alpha momentum pool over here and this alpha momentum scale that I always put next to it, it doesn't lie, guys. The math doesn't lie. It checks out, okay? And so whatever my attitude was, doesn't matter. We hit the critical levels that we needed to gather new momentum and to have additive momentum. And then we got into the squeeze between the 4 and the 9. Boom, up to the 21. Squeeze between the 9 to the 21. Boom, we are attempting to get to the 35. Now, 35 is looking a bit flat here, so we do have to see whether or not we can get to that 1270, but that would be a logical target. And should you get more ambitious than 15. But guys, just remember, we have a lot of resistance up here. We are bumping our head on these wicks over here. So this could be, this could be hard fought, and it can also get slapped down because we do have a naked candle down here. So let's go ahead and update this chart, because remember, we're doing a review of Sol right now. Let's update the chart. Here's our new levels, okay? So our alpha momentum pool did get stretched out, which isn't terrible. It just means that we had a big move, which we definitely did. And if you want to hold our momentum, we do have to hold above 1129. As long as we're above 1129, I'm really biased to the upside. I cannot be anything but biased to the upside. Now, again, guys, these levels are very important. I'm not choosing 1169 or 1155. I'm not choosing 1108. I'm choosing 1129. That's the level that we have to hold for this alpha momentum pool to be sitting on top of it bullishly and have that potential to really just go. If we break down into the momentum pool, we could just be swimming around for a while. Not really something tradable in my mind. If we do want to have general continuation to the upside, because of how fragile this little area is, you should consider perhaps $9.86 as a pretty important level. You can see that does match up pretty much with the bottom of the 4 EMA on the day. So again, like that, I do consider that front runnable to the downside, but we will lose our momentum mathematically if we are below $9.29 on Sol. So that is a critical level that you want to hold on Sol. And if you do just wick down there or whatever, but you hold above this volatility pivot of 885, then on the next volatility play, right? Because a volatility play could pump us up, it could drop us down, it could chop us around, right? Well, as long as we're above $8.85, we always have the possibility that the next volatility kind of chaotic, pump thing could take us to the upside, okay? So underneath 885, and most likely that thing is just going to smash us down to hell again. But right now, everything is looking very good on Sol from a daily perspective. Because the 3-day is closing, I do want to review our previous 3-day call. Look at that. Guys, look at how beautiful this is. It wicked, it just broke. Look at this. Tap, tap, tap on that momentum line that I had pointed out for the Alpha Fam. Again, it doesn't matter your opinion of these assets. Check out my lines, guys. And I'm not using support and resistance. I'm using momentum. We held our momentum line, right? We held that line in the sand to hold current momentum. This is a review of the previous Sol episode. And in doing so, hold, higher hold, pump through that alpha momentum pool. And look, even though we popped up, we did come back down, and look where we perfectly checked back to. Boom. Perfectly to my line, perfectly to the top of the alpha momentum pool. Held that. And what happened next? Boom, another pop, right? Again, so you could just grab that 10%, guys, 10%. That's nothing to sneeze at. That is worth trading, okay? And so, guys, that's the truth in advertising for Solana in the last 3 day. Let's go ahead and update that on the actual 3 day chart. Well, there seems to be a gap with a Coinbase. Not sure what that's about. So let's go back to the daily just so that gap's filled. And you can see our new, well, maybe we can do the 2 day. Nope, 2 day also. That's weird. Solana's chart, pardon me, Coinbase's chart is missing that data. That's weird. Yeah, let's just stay on the daily then, okay? But anyway, I'm showing you the 3 day chart, so don't make any mistake here, okay? That's the only reason there's like an error with the Coinbase, okay? But 3 day chart. And so that's going to be closing at the end of the day tomorrow, but it will suggest that as long as we hold above 1075, that we could continue bullishly. And if we break below 997, then we could have a significant loss in momentum where our volatility pivot is 859. Some of you guys may be saying, well, if the 3 day and the daily are closing at the same time, which set of numbers should I be using? Well, it depends on how long you want to be trading for. If you're going to wait for the next 3 day period or a series of 3 day periods, then use the 3 day. But if you're going to be trading for only like 24 hours or something like that, then you probably want to be using the daily because it's going to give you a clear picture of what's going on. But we can just overlap this because I think you can see that the general continuation similarly as the daily is down below here. So let's go ahead and throw on the new daily as well as the new 3 day, and we can see where they overlap and where they look very similar. So what you're going to be seeing here is that just taking both of those time frames together that are closing tomorrow, right? Not the 2 day, not the 5 day, those things aren't closing yet. Not the weekly, that's not closing yet. But the 3 day and the daily are closing tomorrow. And they're saying that you want to be absolutely sure of bullishness, very conservative, then you want to be above 1129. Okay, you want to hold that. But just for a daily perspective, then as long as we're above 1075, then on the day we still have a chance for continuation. But underneath 1129, we may end up having the next 3 day chart be a little bit iffy, okay? And then for the, this type of critical momentum or the additive, subtractive for the different time frames, again, if you want to be conservative, we want to hold the bottom line of 997. But, we do have some type of wiggle room on the daily down at 929. And that's really because of how much we pumped, okay? How much we pumped. That's why this one is such a tall range on the daily, right? This is the daily. And then this is the 3 day, which is much more narrow. So this will be tightening. This range will be tightening a bit, and perhaps there could be a little bit of consolidation or a pullback or something. And the 3 day again is having a volatility pivot at 859, whereas the daily is at 885. So again, just putting these things over each other, you can see that this is a very critical area, conservatively around 885, and then maybe some wiggle room down to 842, but really 859. So, you want to hold on to this area because underneath it, you could have a chance to just explode to the downside. So, conservatively, 885, 997, and 1129 are the key levels you're looking at for the close tomorrow. Guys, I do believe that does it for Solana. Congratulations to anyone who got in those plays. Those were absolutely excellent. Again, guys, I'm not giving calls, okay? That's not what this channel is about. What I'm doing is trying to provide the threshold levels that you can use for your own intelligent trading. And you guys have to be the ones to decide, well, did we meet that level or not? In which case I'm going long or I'm going short, right? Or just staying out of the market. Um, but that's up to you. And then, of course, usually we look for the next EMA level on whatever time frame that you're trading for, or trading on, or we're looking for the horizontal resistance areas where we're going to bump our head into these wicks, right? So you got to look out for those things as well when we're taking profit. Let's go ahead and jump over to Litecoin, because this is one of those cases where I was more bearish, not overall for Litecoin, but just on the day. When I made the Litecoin episode, I was feeling worried about the chart, and in fact, we ended up pumping. And so I want to show you why the alpha momentum pools are more honest than our feelings. Okay, so what happened was that we didn't have this candle yet when I made the episode. We literally only had a candle that was equal to this one, and I was suggesting, hey, maybe we're going to have a little double top here because we're having a pullback. You could see that we were actually pulling back into this alpha momentum pool. And I thought there was a chance that we could lose that top of this pool. And if we were going to do that, then this would end up being a double top and we would potentially be looking at our range lows again. And I just started to feel a little bit nervous despite the fact that I said we were above the 9 EMA, and we even had the chance to be above the 4 EMA, which did suggest the possibility for continuation, bullish continuation. Now, as it happens, the daily candle did end up closing above the alpha momentum pool, and in a big way. Okay, I think this is the candle that we were looking at, and it did close right at that level, and then the next one just appeared above it and just continued pumping. So this was extremely bullish, and guys, you don't have to listen to my opinion or my feelings. My feelings don't matter. F your feelings. As long as we're above my momentum levels, then we're likely to continue to the upside. And if we're below my momentum levels, especially if we're below the pivot and the momentum levels, then that's highly indicative that we would go to the downside. But in this case, man, we captured the alpha momentum pool and just boom, guys, just absolutely boom, another 10% play if you grab the top of that wick for the alpha fam, if you just respect the levels, okay? Respect the levels and don't worry about, the FUD or the news or your emotions or how, greedy or scared you might be. These are the levels and they work. Look at the pin perfect precision of where this candle essentially opened up here right on top of the alpha momentum level right here, okay? I mean, it just boom, just right above our pool, boom, okay? That's the power of the alpha momentum pool. And yes, I am a human being. In this case, I want to admit that I made an opinion that we could potentially be double topping right there, and I was totally wrong. In fact, I was baseless to have that because we were also in a daily squeeze, and so I did make a mistake in the last Litecoin episode, even though I did point out the bullishness of this setup. Um, just personally, for some reason, I was feeling bearish in that episode. So apologize for that, and we'll definitely try to improve. But of course, I'm a human being as well. Guys, let's go ahead and update this because this was the previous one. We're doing a review, and just for truth in advertising, I am admitting a mistake on that chart, even though my levels nailed it, guys. So again, respect the levels, respect the math, And just ignore the emotions, guys. Just ignore the emotions. Let's update to some new levels here. And you can see it's happening again, right? Like my gut instinct would say, hey, we've spiked up. We're going to come all the way back down. But at the same time, look at us. Look at us. Look at this candle right here. It's right at my holding the current momentum level, right? This alpha momentum pool, the new one. This is the new one, okay? This is the update for Litecoin where our candle is above the alpha momentum pool. And as long as we're above 74.62, again, these numbers are precise. They're mathematically derived, okay? Like 74.62, I have to be bullish on the daily, okay? I have to be bullish on the daily. And if we dip below that, yeah, we could just chop around. But really, unless we violate 71 bucks, essentially, I'm not going to be too much fretting. I'll still be biased to the upside. And our volatility pivot here is having been moved up. So based upon the math, not my opinion, the math is saying 70.24 is where our volatility could just shock and awe us to the downside should we get a volatility shift. And but above 70.24, we can still be relatively bullish. So nothing too much to worry about there for Litecoin at the current moment on the daily. Above 69.45, perhaps general continuation is likely outside of a volatility shift. And then we're going to lose an incredible amount of momentum should we get underneath 69.23. Guys, let's go ahead and take a look at the 3-day for Litecoin as well, since that is going to be closing. You can see at the same time as the daily tomorrow, you can see that these levels are fairly spread out across this kind of spectrum of this pump, and that's just because this has been an incredible pump. If we take it to the bottom, that level that I had said a couple episodes ago for Litecoin that we needed to hold in order to have a pump, let's just take a look at how much we actually did get off of that. 20%. So it's just been a great run for the Alpha Fam if you did take that play off of the critical hold level 2 episodes ago. Let's go ahead and take off the new daily. I'm not really seeing any I'm not really seeing any direct overlapping in the levels. So it really is just a matter of your own trading preference, whether you're trading on the 3-day or you're trading on the daily. And but the 3-day is telling us that we really do need to hold 72.40, okay, for the next 3-day period to be biased to the upside. So that is going to be an important level that, let's go ahead to the daily. Yeah, and that's dead center right there if we're looking at the daily. So yeah, 72.40 is probably a critical number, to be honest. So 72.40, and then above 71.70, we do have a chance at continuation. Just underneath 72.40, we could get a volatility shift to the downsides. Just be careful between 71 and 72, essentially 73 rather. And underneath 71.20, we're going to lose a chunk of momentum where essentially this could just be consolidation, I guess, because we'll still have the ability to hold our level here as long as we're above 70.04. And I think, yeah, that does align with the volatility pivot of the daily. So that is confluent with the daily there. And so, yeah, the 3-day is telling us that that is that critical area, that 70.04. And whether you believe the daily has a little bit more of a buffer room compared to the 3-day, that's just if you're trading on the daily versus trading on the 3-day, okay? Just to make it clear. You do see this huge naked candle right here, which we could end up trying to recover and then bouncing off of this pivot also. So there could be a short setup here where we do recover this candle and then continue to the upside, even if we do remain bullish. And since the 3-day does have a pretty small area down here for the alpha momentum pool, we do have a lot of range to play with bullishly. Like this price can do almost anything that it wants, and it's still going to be bullish as long as it doesn't break under 71.20. Okay, in which case it's going to start getting a little stuck. And and then just if you want to be solidly bullish, then 72.40. Okay, guys, I think that's going to do it for the 3-day on LITECOIN. And oh wow, look at this! Look at the 3-day candle as it just pumped right off of the bottom of that momentum pool. So it's just even even when I build the new like setups, it's just so interesting how these things are just so confluent with all of these areas where we need to hold momentum with all that stuff. I mean, that makes sense, but it's just a beautiful thing, guys. Momentum is so important in trading. You don't have momentum, you don't have anything, okay? And you can see that on the 3-day chart, we do have this bullish squeeze between the 4 and the 9 EMA, which again, if you weren't using the 4 EMA, my trademark EMA there, then you probably wouldn't have even seen that squeeze because this is just kind of going, these other EMAs are just going flat underneath the price action, holding it up. But take a look at the 3-day. Like it's almost like someone's hand is scooping up the candles, right? Just like it did right here. And then we had that little squeeze, right? This kind of like double bottom and squeeze on the 4 and the 9, and it just popped us right up for 10%. So guys, also don't ignore your EMAs. We've got the volatility, we've got momentum, we've got our EMAs, and also, of course, price action, where I did make a mistake in last episode on the price action, but everything else was hit, and all these other levels for Bitcoin and Solana and stuff, all good. So, guys, there you have it. There's your alpha for the day, 3-in-1. Hope you are enjoying, your new year, starting off on the right foot, and stay safe and happy trading.